Hey, hope you all are doing well. John Murphy here. Wanted to talk a little bit about some of the topics that have come up just in the last week or so, talking with building owners as well as tax advisors. One of the things I hear a lot is, what is this a good building to do cost segregation on? Or what's the best building I should buy for depreciation? And there's a whole lot that goes into that. We could talk about what some buildings do better than others typically, but the thing is, every building is going to benefit. Every owner is going to benefit from cost segregation if you have a profitable building, if you can use the depreciation, and if the cost basis is say north of about 200,000, which is pretty much just about all commercial property unless it really is dilapidated. So anyway, if you've got a commercial property and you want to have a quote for cost segregation, just reach out. We're happy to run one. There's no cost or no obligation. The other thing is I tell people, when I hear people say, well, I just don't know if it's worth it to do cost segregation. And I ask them, did they get an estimate done by a professional firm? And they always say, no, they have not. Well, how do you know whether or not it's good for cost segregation or not? You don't know because you don't have the information. We have the information. So let us run the analysis of your property, the address, when it went into service, the kind of building that it is, what it's being used for. If you got an idea of land value, that'd be great because you got to back that out. That's not depreciable. And then we'll come up with a cost basis. Got to let us know if you did a 1031 on it or if it's part of a opportunity zone. But we'll run the numbers for you. We'll give you a price, what it's going to cost you, and you'll be able to see the math. It's pretty much a simple math exercise. Is it worth doing it or not? Can you use it or not? You're going to want to talk to your tax advisor about that. So anyway, that's just one of the things that comes up, and that comes up regularly. The other thing is that I was just going to say is that the bonus depreciation rules, it affects it takes effect when the building went into service. So if you put a building into service, say in 2018 or 2019, 2020, I talked to a lot of owners. They put buildings in 3, 4, 5 years ago, and they're not familiar with cost segregation. Well, they went into service when bonus depreciation was still 100%. So they can still take 100% bonus depreciation on the assets that qualify for 100% bonus depreciation and apply that to their 2025 tax return. So we just do that via a 3115. Our firm handles that. There's a small cost to do that. But that's something that the CPAs like, that we handle that. So we draft that. We do the 481A calculation that basically gives the deduction, the large deduction for the owner in the current tax year. So we do that all the time. Now, also with bonus depreciation, the other thing to realize, another question came up again, and hadn't really thought about it very much, but if it came up once, it's probably out there in the thinking of other people, is that, hey, I bought a building, I put it in service in 2024, bonus depreciation was 100%, or sorry, it was 60% in 2024, but in 2025 now it's flipped back to 100%. I'm just going to take bonus depreciation in 2025. Here's the thing. You certainly could do, you could take the bonus depreciation, whatever is allocated for you, but it's going to be at 60% because you put the building in service in 2024. Doesn't matter that you're applying it in 2025. Okay, we'll apply it in 2025. We'll do the 3115. Happy to do that. But you're going to get 60% bonus depreciation. It does not matter what the current rule is now with the OBB now being 100%. You put the building in 2024, that gets 60%. If you put it in 23, that gets 80%. If you put the building into service right now and you had a binding contract that was after an acquisition date after January 19th, you're going to get 100% bonus depreciation in 2025. Anyway, just some thoughts from conversations that I had this week. If you've got a commercial building and you've not done cost segregation on it, and you are a profitable operator and you plan to hold the building yet for a little while, really should reach out and see if we can do some analysis for you. There's no cost, no obligation. I work all over the United States. My name is John Murphy. I represent a firm called CSSI. You can find me on my blog at costsegbuilding.com. Also reach out to me on LinkedIn. Happy to chat, and hope you have a nice afternoon. Bye-bye.